It's great to see so many agents. This is a little different if you've been on other calls. You all can't see each other, and we can't necessarily see you. So we need your help to see who's in the room. And if you could go ahead and introduce yourselves, say a little bit about where you're coming from, literally, geographically, as well as your organizations, of course, and one thing that you've learned about expanding access and inclusion in your businesses or your investing. So light up the chat, everybody. Let's see. Jessica Pothering out in Lisbon. Welcome. And Jessica's been on the beat for many years, but in particular around this call and introducing us to the topic and to this guide. So, Jessica, I guess we're not supposed to use base of the pyramid anymore. Amie's shaking her head. Tell us why.
I'm actually going to borrow a line from Amie's colleague, Jasna Krishnan at Elevar and NMAS, who sort of illuminated this issue for me actually recently about how, I think for the last 12 years or so, I've been covering this space and promoting economic inclusion and access for people who are middle to low income in emerging markets and generally, underserved by most basic products and services. But those families and those households don't look the way they did, 10 or 20 years ago. And there have been a lot of improvements to services that are available to them. Technology has sort of changed the game in a number of ways. So energy access is more readily available and cheaper. Financial services access is more readily available and cheaper. And so now it's about really designing businesses that meet their needs for not just their immediate resilience, but also for their future goals. So, yeah.
What intrigues me about this topic is this is something, as you say, that we've been watching for many years as, and in particular, there's rising incomes in many places. There's also falling costs. So, as you mentioned, cost of solar, cost of, connectivity, cost of financial transactions with, fintech applications and whatnot. So a lot of things that used to be very expensive are now very cheap, making kind of interventions or initiatives, more feasible than they might have been a few years ago.
Yeah, and also I think we just have a lot better data now too because of all those things, right? And so, it was always that the excuse, I guess, was that rural customers, low income customers were too hard to reach, too expensive, too risky. And now, we have this flow of data that's it's going both directions, right? And so the reach is not only more available, but we're also seeing that where the actual risks really are and are not.
All right, well, let's get to it. So the point is the investors are now waking up to something that's been long coming and may finally have arrived, and let's not miss it now that it's here. So let's welcome our guests. Martina Castro of British International Investments. Welcome, Martina.
Well, thank you so much for having me. Looking forward to
you're coming to us from where?
From London here, a rainy London day.
Okay. Amie Patel, an old friend from Elevar Equity. Welcome, Amie.
Thank you. Excited to be here.
And Borja Garcia Fernandez from Citi Social Finance.
Hi, hello everybody. Very happy to be here and also from London as well.
Okay, so you guys can get coffee afterwards. Juan Jose Dada from FMO.
Thank you. Glad to be here.
And you're coming to us from where?
I'm based in The Hague, in the Netherlands. And
then Wagner Albuquerque de Almeida from the International Finance Corp. Welcome, Wagner.
Hello, hello. I'm Wagner. I am coming from DC, Washington, DC. And it's not raining. It's a good weather here, okay?
All right. Well, all you people on the East Coast and Europe, have mercy to me out in California. It's still a little bit early here. Let's get started with Martina. Martina, just set a context for us. What's at stake and why is this an important issue? Just go broad.
I mean, for us as BII, but I think for the impact investing sort of world as a whole, one of the key themes that's always been there is how do we really try to reach the people that need most to be reached in and impacted positively. And it's always been, I think, a piece of conversation in the industry of, not only how do we do it, but how commercially viable it is, really what's the business opportunity. And for us, it was BII, as we were going into our new strategy period. These were the top of mind questions for us. We knew we wanted to increase our inclusive reach, but we needed to better understand what was the opportunity set, what were the risks involved, what were the returns. And so these were all questions we had actually when we started this collaboration with the other organizations here on the call on this guide, was to both learn from each other and learn more about our own business, actually, about how we were doing on our own inclusive reach, sort of as a baseline, and then how do we enhance it. And so I think this guide brings a lot of this to the fore. We've tried to share our own experiences, how we define things, what we've learned, where the opportunities that possibly lie. And so we're incredibly grateful this is out, and it's been a great opportunity to work with the other organizations on this as well and learn from them.
Great. Let's just make sure everybody understands. British International Investment is what's known as a development finance institution, as is FMO and IFC as well, I think. And as you say, you've been making these kind of investments, but you said you went into a strategy reset of some sort. Just tell us a little bit about what prompted that and what came out of that.
I mean, we go through, as other DFIs and development finance organizations, and any other organization really, but as new strategy periods come in, we do it every 5 years. And in the previous strategy period, we had really focused a lot on sort of job creation and going into markets where our capital was most needed. And we were pivoting into the world of climate finance, but also trying to lean in more into this idea of reaching less served groups, which had been a focus, but definitely not as forefront to our strategy in previous cycles. So what we really wanted to understand, actually, first and foremost, was, well, are we even, better understanding our own impact? How much are we already reaching these populations? With what products, in what sectors, and how do we do more of that? It was an important strategic objective of ours, but again, we weren't quite sure how to define it, what to define as also a target for us, and the first step was really to understand that better. We actually spent almost a year looking at our own data, working with partners to better understand our reach to certain types of populations. And then that for us was the starting place for the new strategy and defining new goals, which we now have. So in the guide, we lay out our own definition of what we mean by sort of inclusive businesses, which is businesses reaching a certain customer segment that lives under a certain poverty line. It could be customer, by the way. It could be, and this is what we found quite interestingly, is often suppliers and employees. And actually, most of the perceptions we had, and I think the market has, about inclusive businesses is, well, it's really hard to reach certain customer types. And it is true. The more you go down the pyramid, I know we're not using that term anymore, but the more you go towards low income and poor population, they have less disposable income. And technology really helps, but it's actually quite helpful to think about it from a different perspective as well. These are people who are involved in supply chains, they can be employees. And so thinking about how we reach those people, not just as customer, was incredibly important for us and really opened the opportunities in terms of what was the investable market.
Martina, you had mentioned, that you hope that this guide would sort of help inform other people who are, trying to think about their own strategies this way, and the way it did for BII. What did you actually learn when you did that excavation of your own strategy, and from what your portfolio work was during in terms of reaching inclusive businesses and where you were falling short?
Yeah. So I think some of the myths that and they're definitely not just at BII, but are out there in the market, is inclusive businesses are small and they need little capital. They're hard businesses, they're risky, they won't give you the returns they need. And that's not to say that's never true. Absolutely. Like there are amazing businesses out there that are doing real impact, reaching, low income segments, which are small and are risky and may give sub-commercial returns. But there is also a wealth of businesses out there that are well-established, mature companies that require larger ticket sizes and that are having equally important impact for these populations. An example would be a business, a big manufacturing business in India, hiring low-skilled, low-income workers and really training them up and giving them better job opportunities. And it's not, that trade-off can sometimes be there, but it's definitely not always there. And we really wanted to use this data internally, but also externally to show there's a lot of perceptions out there that are not always true. And you can find inclusive business opportunities, regardless of your sort of risk-return profile, preferred risk-return profile, and the amount of capital you have to deploy. And the opportunities out there are much more than what people think. So I think those are some of the messages we learned ourselves, and we wanted to make sure we're also out there in the market.
Well, Martina, so you mentioned the risk-return profile, and as you say, some of these decisions that had been made to essentially exclude or at least not prioritize low-income customers are based on those kinds of investment policies. So to prioritize them, did you actually change the investment policy? Are you willing to take higher risks? Are you willing to take lower returns? Is some way BII's and other DFI's strategies going to be actually changed at the policy level?
So we didn't, the conclusion from our research was it wasn't necessary because, again, we can have that type of impact without compromising our risk and return hurdle. This said, we've had a pool of capital, and we've had it for several years now. That is our high risk sort of pool of capital that we use specifically for certain types of impact opportunities, what we call enhanced impact opportunities. And those do include opportunities that would be, for example, using innovation. And we talked about, technology and the importance of it to prove out the technology to reach those populations. Those do come with higher risk. We've had a pool of capital really focused on this type of transactions for quite some time now, but we've actually enhanced it in the last strategy period. And in part, we've actually enhanced it because whilst we are getting higher risk out of these, we're not always getting lower returns, which was the other positive story to come out of this first few years of trying things out and testing.
Great. Well, thank you, Martina, and stick around. But I want to go to Amie Patel from Elevar, and Elevar has been investing in exactly this kind of opportunity thing for many years. And so I want to sort of have you reflect a little bit on what that looks like actually as a practitioner, and again on this risk and return perspective. So Amie, just give us the sort of the Elevar's way of looking at the world.
Sure. So Elevar was established to prove that you could bring a commercial approach to investing and build business models that focus on this customer segment as the end customer and build around their needs and aspirations and their purchasing power capabilities. And so we have what we call the Elevar method, which is looking for pain points that these households are facing, things that could augment their top line, things that could then protect their bottom line, but really are meeting household needs or micro and small business needs, and finding where the market just hasn't gone down deep enough to deliver a product or service for them that's affordable, frictionless, easy to access, high quality, and meets their aspirations. And so how do you build a business model that's not optimizing for bottom line, but optimizing for their bottom line? And so we've come up with some concepts and frameworks to help us think about how to assess opportunities, deliver new distribution models that deliver this product or service to meet that pent-up demand, and see these customers as viable, hungry customers that have long-term stickiness if we can solve their problems.
I love that, meet their bottom line. But so the pressures that we hear are often to go and again, the language is difficult, to go up market to more affluent customers. And that's often what investors will counsel their portfolio companies to do. There's better margins, you have more pricing power, that sort of thing. And so how does an investor like Elevar help companies focus on going, again, down market against those pressures?
So we are looking for entrepreneurs that are leaving industry because they see the gap. These are individuals that have worked in very formal financial services industries, consumer products, et cetera. And they recognize that there's a segment of the population that sits above the poverty line, but well below any sort of middle income, higher income line, and just hasn't been thought of as a viable customer. So you have to think about building a business model where your unit economics can be profitable, delivering at a price point that meets their purchasing power. And you can't cross-subsidize, because cross-subsidize later rounds, you may have other investors that say, oh, the margins for this customer are better, so let's just go after that customer. The thesis of the business needs to, from the very beginning, and the DNA of the business needs to be focused on this customer and how this customer will evolve. And you need to build around that. So what's your CAC? What's your stickiness? Well, how are you serving and getting to that customer in a way that leads to unit profitability? And then the sheer size of the market and the opportunity give you that scale. So you aren't going to achieve the impact without scaling, because it's small tickets, but large volumes of individuals and micro businesses that need access. So that's been the thesis for us.
Can you cite an example or two actually from your portfolio? I mean,
sure. So we have a couple of companies that target affordable private schools in India. These are schools that are structured in a way where the banks aren't able to lend to them because of the way that they're structured. So we have a company, Martina, that created a loan product that these schools could tap into. And the use of proceeds for those schools is to build infrastructure, classrooms, increase the capacity of the schools. And that helps to create a larger, stronger business in the community that's delivering education. And that was an investment back in 2014 where access was a really big pain point for this customer segment. Fast forward a few years, just like any of us who are parents, we also want to make sure that we're having quality education come through. And so we saw another business opportunity with Lead School, which is looking to deliver a school-in-the-box solution that has content, curriculum that can augment teachers, a solution that helps the businesses that are proprietary owned be a much more streamlined business, have transparency on how their operations are running, how well their teachers are teaching, and the effectiveness of the content, and looking to have a very direct outcome on the learning capabilities of the students that are in these schools. And so the price points for both of these are affordable. The pass cost to the end sort of household that's paying for the school to go to that school is somewhere between $1 to $2 per child. So for that price point, you can reach a lot of students. And this right now, I would say Lead is serving over 9,000 schools across India. So it gets you to that low volume, high volume, low ticket price, and then scaling and replicating that business model.
Great, thank you. Elevar has been, operating at sort of like one point in this, kind of capital continuum in this space for a number of years. And you've obviously seen a lot of other investors come in. I think, sort of the thesis of this call is an investor, more investors are waking up to this opportunity. Where are you seeing new money come in, and where do the gaps still exist, and how is Elevar kind of thinking about that?
So I mean, there's capital that's flowing in. There's people that are finally waking up and realizing that in addition to solving planet problems, we need to solve the social side of our world, and people do need better resources. I think we are trying to find a way to get the universe of capital to not see this customer segment as risky, not see them as quote unquote poor people, or people that are living constantly in poverty, but actually seeing them for who they are, which is individuals that struggle with exposure and infrastructure that we have access to. And so how do we then bridge that gap to build that infrastructure for them? And so finding proof points in the business models that we have built, and we have over 50 companies and a lot of successful models that we can showcase, leveraging the data that we've been able to pull from these companies and illustrating all of this, bringing the stories to the market to help people understand that there is a large opportunity set here, and there are companies that are just waiting to grow. We've proven unit economics, we know how to scale, and now we just need that growth capital to come in and sort of get the flywheel to get going and to accelerate the growth path for these businesses.
Just help us with the language, Amie, because you've called it out, and I appreciate that. Low income, poor, base of the pyramid. We've called it the mass market. We've called it emerging consumers. What is this segment, and how can it be lifted up as an appealing customer segment?
So we in-house have a sister organization called NMAS, and what NMAS is out there to do is take this similar analogy of BRICS, which was to prove to the capital markets that there's an opportunity within Brazil, Russia, India, China, and think of EPIC, which is the economic power of industrious communities. And industrious communities are comprised of entrepreneurial households that have tenacity, resilience, aspiration, ambition. And they are the largest segment across the globe. And we're using India as a test case and a proof case to showcase what that is. It's not poor people. It's not low income. Yes, they may be lower on the economic stratum, but we all have biases when we hear these words. Let's reframe this with positive, more opportunistic, long-term thinking and see this segment of the market as the future. And I think that if we can all start to believe and understand what EPIC is, huge opportunity set, that's when I think we can start getting some of the paradigms to shift in a different way.
So industrious households or entrepreneurial households, I think, as well. Right?
Entrepreneurial households inside the economic power of industrious communities. So these are community-based markets. They all rely on a community dynamic to survive, to live, to thrive. It's kind of thinking about what small town, small business USA used to be, right? It's the smaller businesses that create the economies that flow. And that's exactly what these are. They're entrepreneurial households in these communities all across the world. And the flow of capital through them is much larger than any of us would have presumed. And I think the data is now out there to prove that.
So there's the takeaway from the call: entrepreneurial households in industrious communities. Thank you, Amie, and Borja. You have been seizing this opportunity at Citi. So again, just tell us how Citi Social Finance functions within the larger entity, and how also you've been working this vein, this rich vein.
Sure, David. So maybe the first thing to say is that for Citi, this is not really something new. Maybe it's a bit new for me because I have been only 3 years in the team, and indeed I used to work with Martina in BII before joining Citi 3 years ago. But as I said, for Citi, this is no new, right? It's a business that has been running for the last 20 years. It was called Citi Microfinance, where we used to provide liquidity to microfinance institutions across emerging markets. And obviously, because of the business model of the microfinance, the team here were mainly reaching low and lower middle income population. What happened in 2021 is that the bank realized that we have to do a bit more, because this was really a demand for our clients. Our clients are financial institutions, corporate, and the public sector. So in 2021, we decided to issue a 1 billion social bond. So the treasury of the bank issued this bond, and the mandate of the team was expanded. So in addition to financial inclusion, that was all the activity that we used to do with microfinance, with banks, now we have access to basic services, so health, education, agriculture, and access to basic infrastructure, so water, sanitation, transport, telecommunication, and affordable housing. So this is basically a business that we do across more than 45 markets in Latin America, Africa, and Asia. And the way that we do it is working really closely with the local teams, because one of the things that I think is unique for Citi is the local presence that we have in more than 100 markets, which means that we have really people on that market that they know the reality, know the clients, and we have access to that, right? So this is how this has started. For us, we wanted to put a bit more like the typical 1 billion with the social bonds. So we have also a public commitment of supporting 50 million people, low and lower middle income people, of which 10 million are women by 2030. And we are working towards that, right? So yeah, that's basically how this started and where we are today.
So just pause on social bonds, which have sort of taken a leaf from green bonds earlier and have been growing in recent years. And green bonds have some criteria or parameters of how the proceeds are used. Social bonds, as you say, have parameters to reach low-income entrepreneurial households.
Yeah, that's correct. We have, and this is public, so I invite you, all of you, to Google it, or we can send it after this webinar. We have a social framework in which we define the different sectors that I just described, right? The access to basic services, access to basic infrastructure, in which we describe what education means, what health means. But obviously, because this business, we do it in emerging markets, the target that we have is low and lower middle income population, right? So then we have, in addition to the investment thesis and investment structures that we put together, we also put a lot of emphasis on the impact, because everything that we do, you need to have obviously a financial return, but also a social impact, reaching that kind of categories that I just mentioned.
What I wondered, I mean, I know you're specifically focused on, I mean, you're based in London, but you focus on the LATAM work that you're doing. And I wondered if you could cite an example or two actually from the just of the work that Citi Social Finance has been doing to structure these kinds of deals in Latin America.
Yeah, for us, and with Jessica, for us, something that I would say is that we don't do this business alone, right? And what I mean is that we work with partners, impact investors, partners, like BII, IFC, FMO, and others, but also many of the asset managers from private equity funds. So the role that we have is really to connect some of these investors, which are global investors, with the local markets in which we operate, right? For example, with BII, we just closed recently a 100 million transaction. It was a trade finance program to support small and medium enterprise. And in particular, to your question, Jessica, the examples in Latin America, we closed also a 70 million transaction with Aegea, which is a water and sanitation company in Brazil, which what they are doing is giving basic services like water and sanitation in the region of Manaus, which is nearby to the Amazonas region. So yeah, we provide that loan, that liquidity to provide liquidity there. Other examples that we have is also in Africa. It's a recent securitization that we did with Sankin, that this was a mix of not only provide electricity to low and lower middle income population in Kenya, but also doing it in a clean way, right? Because this was for putting solar panels in the houses of this low and lower middle income population. And it was really innovative structure because, again, it was a securitization where we also bring other investors like FMO, Norfund, and Dada as well, right? So just to mention some examples.
Let me just cut in, Jessica, because I want to pause on that. A securitization for off-grid solar that allowed you to take the receivables, I understand, of the customers and then recycle the capital and let them expand further. That's something that we had talked about, and all of us maybe on this call had talked about maybe 10 years ago as a sign that that market had matured and was able to attract now more commercial and thus lower cost capital. And you're saying that's now an example of an evolution of the market where the market has recognized that low-income customers can be bankable?
Yeah, definitely. And for us, that was a very, very important transaction because Sankin was a client that we started with something small of 10, 15 million, like 3 or 5 years ago. But then as the market was maturing, and obviously we see more interest from impact investors and for investors, we decided to put in place this kind of securitization that was really successful, because what I'm saying, right? We just bring new investors to a structure. It was the first securitization in local currency in a country like Kenya.
Borja, does Citi see this as a growth opportunity, you know, like a growth segment of the business, or is this somewhat below market?
No, definitely it's as a growing business. And indeed, when this started 20 years ago, it was like something small, like just structuring 100 million per year for this microfinance institution, something that obviously was not core to the business. But now, a couple of years ago, there was a strategic decision from the bank, and now this thing has moved to what we call the banking team. We are sitting in the corporate banking team, and we work as any other bankers with our FIs, our corporate and public sector clients, right? And the main reason for that, Jessica, is because we see the need from our clients, right? So basically, they are asking us solutions in terms of how to issue more social bonds, how to have more sustainable supply chain finance programs, sustainable trade finance loan, new structures to diversify the funding base with investors. So yeah, definitely it's core. And just to give you one number, last year we mobilized 3 billion of capital on these transactions across 90 transactions in more than 45 markets.
What about, I mean, you say that the investor appetite is there, but like there's still, you know, and it's exciting that the money is coming in, but there still obviously needs to be a lot more money unlocked. So what do you see on your side as obstacles to other investors, you know, and either, you know, whether that's on the pipeline side or diligence side, and how is Citi helping investors overcome those issues?
I think I normally classify the investors in 3 categories. Obviously, multilateral banks, DFIs that have been doing this for many years, and it's core to their strategy and their business. Then we are seeing more and more specialized impact investors, let's say, like more asset managers or private equity, private debt funds, which are specialized on these assets. And then I think that the challenge, and going specifically to your question, is more this kind of more generic investors like financial institutions, asset managers, insurance companies that maybe impact is not core to their business, but they're having more and more interest, right? So I think that the challenge is how these institutions can move to start doing some business in impact investing or in this market, or trying to have an impact in low and lower middle income, right? So I think that there is a lot of work to be done with these no really specific impact investors. I mean, more generic investors in the market that want to do it, but in many cases they are starting the sustainability ESG journey, and there are some work to be done there.
Great, thank you so much. And that's a good segue to Juan at FMO. And the DFIs, the development finance institutions like BI, like FMO, have been pressed, I think, in recent years to become more catalytic, to try to draw more capital in to these kinds of deals. So maybe just tell us a little bit about how FMO sees the entrepreneurial household segment, and what strategy changes or policy changes you've been making.
Sure, thank you for the opportunity. And I think everything that has been said and the different angles and strategies that have been mentioned at the end are really targeting the same objective and based on the same principles. So it's very nice to see the synergy and the alignment there. In FMO, we're a development financial institution. As said, we believe that, and we only work with private sector. Maybe that's important to clarify. And in that sense, then we believe that if we can contribute to an economy having access to food, access to energy and power, and access to funding, then the economy can thrive by itself, or can go faster in that sense. We know there's a lot to do in health, education, and other sectors, but as we focus mostly on private sector, then we're small, then we concentrate on those things. And in that sense, then the objective of having a sustainable economy and an inclusive economy And a green economy has always been on the agenda. It's not that new in our strategy. We do go through those strategy cycles as mentioned before, but it's been a few now since our Sustainable Development Goal 10 of reducing inequalities has been part of our core objective and mandate. In that sense, we look at the equalities between countries, and therefore we target the countries with the worst conditions, as well as the inequalities within a country. And that's where then we prioritize the support and the access to goods and services for the, I don't know which term to use anymore. We've used so many today, but economic empowerment and financial inclusion of lower income categories and less benefit or less empowered groups.
The language changes are hard, but we're making progress here, so that's good. The guide that you all have been involved with is an attempt to try to walk investors and others through kind of step-by-step strategies and practices and around due diligence and impact management and measurement. What are some of the, I don't know, things that people might not have thought about how to actually operationalize these kinds of ideas?
And it doesn't come as rocket science, but our main objective or advice is really start with what you want to achieve and try to define then what's the strategy, the intention that you really want to put into those investments, so that you can be intentional and not just get your results out of a consequence in that sense. So the document and the guide really talks about being able to define what your strategy is, what your target segment is, how do you define then that group that you want to work with and benefit, empower, or make business with. Have then some sort of a definition, taxonomy label around that, so that you can then later really not only target, but also screen, identify, keep record of, and report. And by the way, that also has been around in the industry for a long time, is exactly the same as the green and the social bond principles that you were talking about before. You have to know what you're talking about, you have to be able to identify it, you have to keep record, you have to be able to talk about it, and of course, close the circle with monitor, evaluate, and really learn from that so that you can start again. It sounds very simple, but once you put it on a guide and once you start putting all these terminologies and all these different contexts around the table, you realize that you have to do the work yourself and really define how all this interacts with your strategy to tailor it and be able to use it.
I think what might be helpful, one, is if you could provide an example or two of how you guys are have used that, the taxonomy, but also just some of these data proxies that you guys highlight in the report, in your own portfolio search, because it's, as you said, maybe it sounds simple, but actually once you get into the particulars of a market or a specific sector, that actually things become a bit murky when there are data lapses, right? So.
Sure. Let me use an example with a financial institution providing loans, because we also heard a few cases when we're talking about investment funds and private equity like type of scenarios that allow you to target a little bit more and to be more specific on what you're looking for. But when you work with a bank and that bank has to deploy a larger amount of capital into a larger number of recipients, if you want them to really look for or go into a new segment of the population, then you have to first help them define what the segment is. And if in this case we're talking about the low income or marginalized populations, then the bank cannot really do an assessment of the income level of every single applicant at the time. We better then start with a bit of assumptions and proxies that allows to say, okay, if you're a smallholder and you are in rural area, it's very likely that you're going to be in this category that I'm targeting. Therefore, I can count to, I put you as my target population. That doesn't mean that every single smallholder in rural area is going to have that income level, but chances are that the majority of them will. And therefore, that's what you mean, or the concept of using these categories as proxies, so that as a bank that is processing a larger number of transactions, they can start keeping track of it. What we mentioned about closing the circle later and really going and evaluating and measuring and learning is because once you have the time, once you have the portfolio and you really know your customers, then you can go back and you can go back and check whether your assumptions were correct or not. And in that sense, then refine your screening criteria and your proxies to the definition of a targeted population in that sense. We work with the financial institutions that are building then these their own definitions, their own taxonomies. Therefore, building their own loan books in these categories, very similar to what Climate has done also in the past, so that they can later really bank on those loan books and even issue social bonds or inclusive bonds or gender bonds or small holder oriented, et cetera, et cetera.
Terrific. Thank you. Thank you, Juan. Wagner, you get to bat cleanup. I'm not sure if that metaphor translates across geographies, but it's baseball season here in the US. So the IFC has a purview over all of this kind of stuff, and just give us a sense of sort of the urgency of the moment. I mean, people talk about a polycrisis, climate change, conflict, macroeconomic environment, but then also the more chronic things, role of women, the displacement. I mean, how is at a broad level, how is development finance mobilizing capital to meet these challenges?
Okay, thank you. Thank you to be here. I think it's a quite interesting topic. It's a good opportunity to listen to my colleagues, okay? I think the importance to listen, because I think everybody has something to learn. Okay, so I am learning from them. I think one of the questions we also learn. This is a very major issue. And I think we need to reflect how much we progressed, okay? I think we progressed we have done a good progress until COVID. After COVID, I think we need to realize that we are losing the ground, okay? I think we are losing the momentum. And it's becoming a little bit more difficult. Also, I think we cannot forget about climate. I think climate is something that has a major potential impact for what we will see in the future, okay? So if we only look about today, we still have more than 4 billion people without access to health. We have today more than 2 people without to services like basic sanitation. At least 1 billion people doesn't have access to finance. I cannot imagine not having a bank account. Can you realize not using your fancy iWatch or iPhone to pay your bills? Yes, that is and by the way, this is even more, if I look for this kind of standards that we have, this 1 billion is a very broader number, okay? It's not only have access, but what is the minimum kind of service that you have? Also, we see today almost 1 billion people suffering hunger, okay? Not having energy intakes that they can live, that they can push and they will do the work that they need to do. So there is not enough education. So I think if we look for how much there is, the space that we have is huge. One of the things that we are trying to solve is, for example, is agriculture. 80% of the food that Africa produces is coming from females, from women. But interesting enough, they only have 10% access to the land, which push them to be in informality. So to be informal is not, for me, is a key element of this transition. We cannot allow people to be informal. They need to be part of a bigger system. So it's not only selling to them because they are buying. Okay, so if you go to Yemen, okay, in the middle of the crisis today, they are buying, and this is being provided by the private sector. But we need to move from this to the formality of the process. They need to be part of the system. They need to have the rights. And to be right and to voice it, you need to be part of something bigger. So I think there is a lot of things to be done. And the private sector and the capital markets have a role to play. And here comes IFC. We are not providing only money, but also we are trying to provide the standards. We are trying to provide to bring people to see the issues in the same way, to open the market, to do such, to do sustainability, and many other things that need to be done. I think I spoke too much. Sorry for that.
No, not at all. I have a follow-up question though for you. You know, a number of those issues, I mean, you're spot on all of those issues, but a lot of them are bigger systems issues. And my question is, for the private sector's role in moving that needle specifically, what is their imperative to do that? And what is their role in doing that?
Look, I think the private sector has a role like the public sector has. Okay, so there is no one single solution. There is no one single opportunity. Okay, but for the private sector, it's more consumers. For the private sector, it's more safety places. For the private sector, is less, is maybe spending their money in a different way. So, have you given an example? Okay, so we are talking. That's something I'm really thinking about, because we are thinking about the strategy for the next 5 to 10 years. So last day we spent a few hours to think about what are the drivers for the IFC for the next 5 to 10 years. And the world will be a very scary place if we don't do something. If the private sector don't do the necessary investments. One thing that we are discussing a lot is, for example, is technology. Is the new AI and all the new technology is going to left behind people? If they are, this is a major issue. I think the inclusiveness will need to also to rethink how we can bring this kind of new solutions, new capacity, also to the smaller business. The smaller business cannot be left behind, but they don't have the billions of dollars to make these investments. So whatever, I think the private sector also need to be aware is that whatever you invest, your benefit should not be constrained to only your business, should be also going down to the other levels of the segmentation of the clients that we have. We operate not only in the middle income countries, yes, we know that. We also go to IDA. IDA is regular IDA and the low income IDA. And also we have the FCS. If IFC only focus on the middle income, we are not helping. Mm-hmm. The same thing when somebody goes to one of these places, let's say a food company, a global food company, they should make sure that they are trying to cater all the segments. And they need to find products, they need to find ways to deliver that is affordable to this population. That's the role that we need to do. And we need to leverage all the technology and all the solutions that is coming to benefit everybody, not only to a very small and circumscribed consumer and pool of people. And this we are talking about is not only about money, yes? We are talking, it's not only about social issues. So when I talk about what I mean with that, it's not about how much you have in your pocket. Sometimes you have, for example, you have the whole displaced communities because of war. They had they had money before, now they don't have. So you cannot see people only as they stand today. They are much more, they bring much more to the equation.
That's super important. Thank you. Mm-hmm. So Wagner and everybody, that the question about consumer products, Take Kim put a question in the chat about does anybody have a view on the role of large consumer sector corporates as a player in animating this space? Have you seen major moves to co-create large-scale multi-party solutions to move the needle on progressing entrepreneurial households? So anybody have an example of a consumer products company making a big move in this regard?
I think that I have to. Sorry.
I didn't follow the question. Can you repeat? Sorry, my mistake.
It's just like, are there corporates that are moving to target and serve better these entrepreneurial households in some kind of way, in maybe in a collaboration? If not, we'll have to do some reporting and dig some up, or find some examples.
I was gonna say, David, for us, obviously, everything that we do in Citi is through big corporates, financial institutions on the public sector. So working with corporates, in particular, what we have seen more and more is the supply chain finance program, sustainable supply chain finance program, supporting small and medium enterprise and small farmers in emerging markets. So that is definitely something that we're seeing more and more from the corporates, right? When they're trying to use these suppliers that in many cases are small companies or micro companies. In that way, we're seeing more product like that in the market right now.
If I understand the question, and I'm not sure I do, I think the example is always the one that uses, you can get Coca-Cola into any village in the world, but so why can't we get vaccines? That sort of thing. But let's move on to another question. Go ahead.
Oh no, I was just saying, like, I think there's been like a lot of breakthroughs by major companies on reaching like last mile distribution, like really having better channels. I think, but to your point, it really brings out the importance. Like, well, they're using it to deliver certain products, but how impactful are these products? Like, how much are they changing people's lives? And I think what we're still somewhat, oftentimes we talk about numbers of people reached. It's great if we can reach millions of people, but are we supplying them with, products that meaningfully change their lives, meaningfully improve their outcomes? And I think that's where we need to be also slightly sort of skeptical of just big claims of reach, and really trying to understand depth of impact better. But that's not to say that these companies cannot have really important impact into these type of customers. But I think the sort of reach versus impact are slightly different conversations. They can be overlapping, but we should be mindful not to really overlap the two too much.
Right.
And in that sense, I think it's also important to remember that the reach or impact, but again, with the question of whether it's both or not, also happens from the supply side. So there are a lot of corporates. We may not work with the larger multinational corporates that I think the question was referring to, but a lot of large corporates at a national level are working on their supply chain and really trying to get the reach and their then economic relationships and commercial relationships further down the chain. In that sense, that we do see a lot more often.
Great. I have another question from Manuel Casta, and then I just want to mention it's coming up on the hour. We'll give you each a chance to have a final word, but then we'll actually kind of keep it rolling for another 15 or 20 minutes. And if you can stick around, we can keep talking for a little bit. And folks, obviously, if they have to jump, that's fine. But Manuel asks what you're doing kind of on the other side to get organizations ready to receive the capital. So there's a sort of capacity or an awareness readiness gap. So he says, I believe many emerging market organizations haven't got a clue of the types of capital out there, not to mention the timing, documentation, fit requirements. So how to get to the pipeline, I suppose, and build that up. Amie, that might be a good one for you.
I was just going to say, I think the deeper and the richer the PE/VC ecosystems can be in these markets to advise the accelerator programs to help entrepreneurs who want to build businesses. I feel like that question is coming from, if you're a business in this market, how do you sell your company to a broader set of investors that are out there? And I think the depth in each market differs. And so in Latin America, it's not as wide and as deep as it could be. And that's something that we all need to think about. And it's harder. I'm not throwing any of the DFIs under the bus, but like DFIs have a harder time going into middle income and higher income countries, which is what LATAM is mostly. And so where do we find the deeper pockets to come in and help advise, keep the fund manager space growing and thriving? And how do we then match with those entrepreneurs that are looking for capital? But I think that's where it starts, is where there's people managing capital.
Well, that's a good question, because as you say, there's restrictions or guidelines on income level of countries, but then there are segments within the country that may not obviously be of that in that income bracket, and that's another question, a couple questions we have here about sub segments within markets. So the question is women, youth, differently abled. There's also a question about LGBT TQI folks who are often ignored, and that they have the most challenging time in access to services and often overrepresented in the bottom 40% of population, says Kelly Widelska. So subsegments, I guess, is the general thing, and the general category of questions, reaching categories that may not be the top line.
Yeah. And then you need people to be like the depth in, say, a gender lens investing or a child lens investing needs to go beyond just a Series A or a pre-seed investment strategy. It needs to have follow-on capital to keep going for those businesses that do accelerate. So I think it all comes down to the depth and the commitment to the region and to the theme that we need to keep pushing for.
I think one thing that I, at least from my side, what we see, okay, clearly the world is a very different place, okay? Latin America is not the same to Africa. Africa, we say call Africa, but Africa, there is 54 different realities at least. But there is one commonality sometimes, is capacity building. So capacity building is something that we need to invest much more to unlock part of the thing. It's not only to give money, but to use this money with the best outcome. Because only giving money, sometimes you create more problems, okay? So you don't really remove these people from where they are. So the knowledge is a key element. My concern is that the knowledge is moving so fast sometimes that we don't have the capacity to deploy in the same way that we should be doing that. Also, there is a question of affordability. Technology comes with affordability at the beginning, how these kind of things can be bridged. And then here comes and be blended finance. What kind of different kinds of types of capital that can de-risk and allows people to play a bigger role? I think that's for me a very important part of the conversation.
As I said, we're coming up on the hour. I want to give each of you a chance for a sort of final comment or thought or reflection on what others have said. And then we'll close the official call, and we'll, as I said, we have the after party or the hangout. So maybe in the same order that we started. Martina, do you have some final thoughts?
I mean, I just found the discussion about how do we define these groups and call them, and maybe those are actually two separate concepts, that are really fascinating and important. I do think making sure, I mean, to Juan's point, you need to define it somehow to know whether you're achieving what you. How do you define it in a way that is empowering and positive and brings other investors in? So that's definitely one that I think we'll take and think through as well in the future.
Great. Amie?
I'll echo. I will say it's good to have all of the frameworks, but how you apply the frameworks and the proof points that you build. So your thesis, your impact framework, and what you're measuring, why you're measuring, and then how you build your business models for this customer segment is really going to be the differentiator for the future. And I am hoping and excited for everyone that's on the call and everyone that listens in the future to believe that this is just as viable of an investment opportunity as everything that's in the planet space. So we really need to think of these as two equal spaces to deploy capital behind.
Terrific. Borja?
So to me, something that I always say, I mean, I used to work starting in the IDB Invest, then in BII, and now in Citi. So to me, one of the key points on these years is that the gap is so big that I think that no institution is going to be able to do it alone, right? The public sector, NDBs, the private sector need to work together. And one of my main obsessions in some way is the mobilization of capital from all of these different players in the market, right? So I think that I also sit on the 2X board, that, as you know, is the gender lending investing institution. And something that we always say there as well is I think that we have been talking for the last 3, 4, 5 years how we mobilize capital, and now is the moment to really mobilize that capital and reach that kind of segments, which are the ones that most need it, right?
Let's just pause on that for 1 second, because I think you have a goal at Citi about how much capital you really want to mobilize. Is it by 2030? It's a pretty impressive goal. What is it?
We have a 1 trillion sustainability capital, but as I say in the presentation for social finance, we wanted to be beyond like the pure numbers that in some cases is really big numbers. So it's a goal of supporting 50 million low and lower middle income population of with 10 million a woman by 2025.
Okay, so some numbers that we can keep track of. Thank you. And then Juan.
Yes, I'll basically bring the 2 points together. I think it's important to have a strategy, to have a target, to have an intention, to define it, and if you do it well, you're gonna do good. And the second point of Borja is, and there's room for everyone. There's plenty we need to do, plenty that has to be done. So you can carve your approach within this big umbrella, because it's gonna work out, and it's gonna work out for all of us. Great.
And Wagner, you have the last word.
Oh gosh, this is terrible. All the intelligent people said what I should be saying. Okay, so that's not much. I think the only thing that I wanted to say is, on this process, we need to think about to reduce the informality. Okay, because there are some business models that are trying to leverage this, but in an informal way. And this requires the governments. Okay, it's not only the private sector, but also the public sector trying to do the right things in the right way to facilitate the people's lives.
Terrific. Okay, well, thank you, everybody. Thank you, all the panelists. Thank you, everybody on the call. Thanks to the ImpactAlpha team. We will, as Zulema said at the top, we will do a recap of the call and a video replay in the Friday brief. We'll also send out the video, I believe, to the folks who've registered on Zoom. So folks who aren't here, you will have seen this if you get to the end of it. And I think that our after party is a little less festive when we don't have the audience in the room with us. So maybe we'll just let it go now and follow up with the remaining questions with the folks. Thank you, everybody who's participated in the chat. We can see you there, and we'll round up that as well in the post.
Great.
So look for your name in the post. So that's a wrap, and thanks everybody.
Thank you.
Thank you.
Thank you so much.
Thank you.
Thank you. Be safe. Bye.